So this is the first episode ever of the Venture Capital Show with Andrew Bott, and I am Andrew Bott. If you could give a warm round of applause to the speakers on stage. We are going to just do a little round of intros. Why don't we start with going to my left, and we'll go clockwise. So we'll start with Vikram.
Thanks, Andrew. Hi, everyone. Vikram here. Born and brought up in India. Moved here a couple of years back. Started my career at McKinsey. Worked mostly in Southeast Asia, North Asia. Bunch of clients around the time when Alipay and WeChat were coming up in or expanding outside China. Started my investing career at Bolderton, where I did a short stint, looked at early stage deals. And for the last 3.5 years now, working at Unbound, which is a growth stage venture firm. We usually step in Series B and later stage investments. I focus primarily on fintech and gaming related investments. So if any of you gaming buffs are out there, we would love to chat more. I sit on the board of Fnatic, which is a London-based esports team. And we have done a couple of other fintech investments. So love to chat about fintech, gaming, and especially on the synergies between East meets West. I think I'm particularly excited about the large markets in the East and the design and the product focus on the West side of the world, and see how I can do my best to find a lethal combination in between.
Awesome. Great to have you. So next up, we have Dario. Dario, it's great to have you. And it's amazing. You look remarkably similar to your real life character. So great job on your avatar, sir.
Thanks, Andrew. Hi, everyone. I'm Dario. I'm a venture investor at Anthemis Group. I've been there for about 3.5 years now, really focusing on investing in fintech or digital financial services. So, yeah, really early stage. So from pre-seed to Series A. Kind of before Anthemis, I worked at Jumo, which is a South African fintech focused on empowering unbanked consumers in emerging markets, where I was involved in strategic partnerships capacity. So that involved the support and development of prospective FSP, MNO, and technology partnerships across near existing markets. And then prior to that, kind of worked at a boutique investment bank turned private equity fund, focusing on internet-based businesses in the MENA region. Happy to be here. Really, the core focus for me these days is investing in kind of early stage fintech opportunities on the embedded finance thesis. For me in particular, the intersection of media and financial services is of particular interest, and how the fintech layer can create new opportunities within the space. But I'll pause there, and we'll probably get to that at some point during the conversation.
Great to have you, Dario. And next we have Ricardo. Ricardo, welcome.
Thank you, guys. Pleasure to meet you all. Pleasure to meet you, Vikram, Dario, Alex as well. Thank you all for coming. So about myself, little background about myself. I started my career in venture at Rocket Internet. I launched one of the companies called SipJet. It's a dry cleaning on-demand delivery service that recently, well, I think last year, was acquired by the Launder App, a London-based also dry cleaning on-demand service company, focusing more on the B2B side. So that's what opened my eyes and more or less career path to the venture space. That kind of opened the doors for me to working at different funds like Cavalry Ventures in Berlin, a pre-seed early stage fund from the founders of Delivery Hero. Later, I worked at a B2B SaaS focused VC fund based in London called Nauta Capital, of Spanish origin, and covered for 2 years the logistics and supply chain space at a multi-family office in Hamburg. I was running the venture investments over there at early stages as well, covering from seed to Series A. And since the beginning of the year, I've been working at Cell Capital Partners, which is a new investment firm or venture capital fund focusing on through our industry-specific funds at the deals that go from pre-seed, sometimes pre-seed, but mostly seed to Series A, sometimes Series B. Yeah, I can leave it there for now and leave maybe Alex the mic.
Awesome. Great to have you. And next we have Alex. Alex, thank you so much for honoring us with your presence and taking time out of being one of the most active seed investors in all of Europe.
Yeah, well, thank you, Andrew, for inviting me on stage. I'm Alex, not based in London, based in Bonn, Germany. And before I joined HGGF, actually 16 years ago, I did company building. I worked in sales function and startups and IT and strategy consulting. And HGGF is a special animal. It's almost like a venture fund. We are structured and in the same way operate. But it's a public-private partnership. Majority investor is the German government, and our focus is to invest in very early seed companies in all industries, hardware, life science, and digital tech software, and many, many clusters. And what makes us different, we are very active. We do 40 investments per year and have been doing this now for almost 16 years. So the total is 630 seed investments, which is quite a bit. And in terms of industry, we're not really focused. Thanks. We're not really focused. We do fintech, which has been mentioned before. We have quite a blockchain crypto portfolio, but also IT security, a little bit e-commerce, but then also biotech, medtech, robotics, energy. So we're very broad. The investment team is large. It's 40 investment managers, and they are specialized, of course. And yeah, we've seen a great upward trend in the industry in Germany, but also in Europe. And I'm very, very optimistic about the European space.
So to start off with, what is the journey of starting your own fund like, and what's some of maybe a learning or two on going through that, maybe starting your first fund that you think would help folks who are doing something similar?
So the good news is today it's much, much easier than just even 5 years ago because there's so much more capital and so much more understanding of the opportunity in the venture space. So it's not easy, but it's much easier to raise capital. And I think there's several avenues to raising a fund. And I think one, maybe the classical avenue is being an entrepreneur, being successful, having money, doing business angel investments quite successfully, and then taking that success as a reference and approaching other investors and raising a fund. And I think that's maybe the typical route. And usually you wouldn't do that by yourself, but of course in a team, because I think investors would require to have at least 2, maybe even 3, depending on the fund size. And I think another avenue, and that's a little bit the high-tech Gründerfonds avenue, is I think there's significant public interest in supporting the venture capital industry on a nation, but also on the European level. And for example, the European Investment Bank, they have huge facilities. For example, in the circular economy or in other areas, AI or blockchain, where they're basically an anchor investor. They say, well, we'll give you 40 million, 50 million, maybe even more. But then they require you to find other investors, which is much, much easier once you have a large investor more or less committed to the fund.
I think one of the biggest things I'm curious about, Alex, is how to what that process is like. So how do you get them to be an anchor? Like, what's is it just about filling out the right paperwork and kind of going out and making it happen? Is it a time thing, or is it something a little more than that?
I think it's also an input thing. I had a boss many years ago who told me the biggest driver of the output is the input, and I think you have to knock on many doors to find the right investor. And I think the whole process of knocking and I guess initially getting rejected improves, is a great learning experience. It builds character, but it also improves the focus, the focus of the fund, and also also improves the pitch, and it increases, I guess, market intelligence. You learn what investors are looking for. And for example, right now, it's fairly easy in Europe and also in the US to raise a fund that helps the investors address the circular economy or the sustainability issues. So many corporates like to invest in such a fund because then they can themselves tell their investors that they're doing something on the sustainability issue.
Yeah, I mean, from a fundraising point of view, I think it also depends really on the underlying thesis. I think that for us in securing a lead or an anchor with new fund opportunities, it's really about finding a partner that, backs your vision, whether it be out the money currently and kind of comes into fruition as economic trends kind of crystallize, or whether or not. I mean, that's really the beauty of it all. And I think in our instance, that could be a large corporate that's looking for exposure into new sectors, or at least somebody within those institutions is on the same wavelength in terms of appreciating and understanding the lens in which you're looking at opportunities through, but doesn't quite have the resources at bay to be able to effectively deploy capital and or increase their gain exposure into those spaces.
There's more capital in the market than ever before. It's easier to raise a fund than ever before, probably, especially in Europe. And the European market of VC is obviously maturing to the levels where the US is heading or is at now.
Yeah, I think this is great. I think what I would love to hear before we jump to the next subject tonight is any practical tips. So folks who are starting their first fund, if you can rewind, Alex, to a couple years ago, and for the rest of the folks who are maybe more recent, are there any practical tips, like for folks who are looking to go their first fund? I think all experienced VCs know it's going to be a long journey. It's probably going to be a year and a half. They're also aware there's going to be a lot of no's. What are some of the other things that the panel can offer?
I think if you're really convinced of an opportunity, whatever that might be, even if it's unfamiliar, if it's new, if it's innovative, it might be very hard to find investors, because it's always hard to find people who buy something that's very new. I think you have to just be persistent and stick to it and keep pushing it. And I think as we invest in innovation, also investors have to be courageous to be innovative themselves and not just copy what has been successful in the past.
I think what everyone has mentioned, a differentiated approach, I think either to the access of the deal, depth of diligence, or sector expertise, or speed of execution. I think there has to be some way to differentiate yourself in the market. And I think other thing to also understand is most of the LPs are not just subscribing to the fund for just one cycle, but they underwrite it as a that they will invest in the second fund and the third fund coming out from the same GPs. So I think from that point of view, the vision and what Alex mentioned, I think the vision and the whole execution has to be thought about in a 10-15 year time frame rather than a quick flip of 5 years.
Moving on to the next subject, I think this is our news of the week segment. Are there things that stood out? What are some of the things that you've been talking about in your circles as venture capitalists?
We have been recently chatting about NFTs. I'm particularly very keen on understanding how digital ecosystems and also now the physical sports, NBA Top Shots has been stealing all the limelight with, I think Dapper Labs made around 600 million odd revenues thus far. So I think just cracking our brains on understanding if the whole momentum is short-lived or is it something more tangible to look deeply into.
I was just going to echo what Vikram said. Particularly interesting space. There's a lot of debate around whether this is a bubble, whether we'll see continued momentum. I think kind of looking at use cases that extend beyond the top shots and kind of digital art space. And I guess the applicability to gaming was kind of listening into a conversation a couple of weeks ago regarding kind of Dapper Labs' strategic roadmap for the future and how they're looking at building out these opportunities in the gaming space. So excited to see crossover there. I'm sure Vikram, you're probably very aware of this considering your background.
Well, I know if I could wear my Elon Musk NFT avatar right now, like if I was the only owner of it, I would so be wearing it like right now. So I think folks who are building things like Roomkey, I think there's definite potential. Like I'm starting to see the crossover, right? It's like we have these virtual this virtual ownership, and this is the perfect environment. So now we have a virtual environment. I think it's only a matter of time before those things merge, right?
Again, I think the way, at least we have been thinking about it, is you'll have a digital footprint of physical objects. I think what Dario mentioned, like art and some of the other stuff. And I think then the transition is how do you think about digital assets, and people who have played CSGO, Counter-Strike, or Dota, they would realize that these, or even Fortnite, these skins are going for 100K odd figures on secondary marketplaces. So I think the whole combination of physical, digital, metaverse, you call it by any name, but I think at least I'm pretty excited about the early green shoots I can see happening in this area.
I totally agree. I think many things qualify as an NFT. It could be your identity. It could be your high school diploma. It could be property rights, company rights. I think it's the whole story of tokenizing everything that could be NFT'd. And I think the opportunity is huge. And I think that's being shown, reflected in the Ethereum price increase and also the Binance price increase, which would be two infrastructure technologies for NFTs.
On the topic of NFTs, I guess something which excites me personally is applicability in the music space. It's become common knowledge, at least through publicity and the likes of Kanye West and his rants surrounding his record deals, and even Taylor Swift and the Scooter Braun situation, and how we could, and even just the lack of touring on the back of COVID, and how we can find new revenue opportunities and monetization channels for musicians or artists in that space, particularly with there's just content, etc.
I want to shift gears to investment. From your perspectives, as VCs have been active through lockdowns in different countries, has your process of investing and finding startups changed permanently?
From our perspective, no. I mean, in the sense of we've always been a decentralized team or organization. We invest across Europe and the United States. I think from a access to deal flow point of view, obviously you're not able to meet face to face, whether it means meeting with a founder or going to a conference. But I think that people are a lot more open to communicating, or at least approachable online in this regard than they were previously. When it comes to doing diligence on founders, etc., we have done deals where we haven't been able to meet those founders face to face, even though ideally that's how the typical process would have been, and we would still encourage it. It's obviously not possible, and so I mean I wouldn't say it's necessarily had any form of negative impact in the way that people that some others may experience, but that's just my perspective.
So I can maybe share two things. First of all, we started to do much more active deal sourcing by going out and scraping databases, where we try to identify founders that are maybe not even in the fundraising process yet. So because we missed all the events and everything, we thought, well, let's just go out and find them, and it has been quite successful because once you identify the founders and they're open for taking on investment, there might be much less competition or even no competition, and a much quicker process. And the other thing, I think I mean, doing everything through video and almost no travel or no travel, it took out a lot of friction from the process.
For us, given we operate a global fund sitting out of London, we were always comfortable sourcing and doing bulk of our diligence process through digital means. I think we do miss meeting founders in person. I think as humans, we have got accustomed to rely on Zoom and have those 45-1 hour chats to identify if we really gel up well with the founder or not. Going forward, as markets open, as travel resumes, I don't know if meeting in person would even further shorten the time duration between getting conviction about an investment. That's still a bit of a question mark, which I feel. I've heard some instances where people have just met for a coffee and signed term sheets. So I don't know if that would overpower a Zoom call, which might have been scheduled 2 hours later than the coffee meeting.
My opinion has changed a lot since the beginning of COVID and lockdowns. In the beginning, I agreed with Alex that top of funnel has been more data driven on my side, at least, more focusing on trying to find the founders before they even go out fundraising, and more trying to analyze databases. And that in a way, I or my team and everybody in the fund became more productive, I would say. Skip that forward towards the end of 2020. I was having quite a lot of calls with founders that I thought were interesting. I got, I was doing these 30-minute calls where I realized that if I do only 30-minute calls, that's super productive, and I can take so many more calls and speak to so many more founders. And that has changed a little bit in 2021, where I realized, sure, I get more calls done, but the depth of the conversation is still not the same as when I do longer calls. So now I'm back to trying to speak longer with very selected founders.
For reaching out to you guys, so for entrepreneurs that are trying to get advice or to have a conversation with you, well, what are some tips that you have?
I think it really helps to check like the focus of the fund and if it fits. And then I think if people can be precise, so there's a big problem, we're solving it. I think it could fit to your fund and your portfolio, it might interest you. Then I personally try to really answer every message and every email and on all the channels, which is tough, I think. But being precise and saves time on all sides.
Yeah, I think it's about keeping it simple. Also some people have this misperception that it's very difficult to get through to VCs or venture investors, but I think that's not true. I mean, in the case for us, well, just on a personal level, I mean, I see everything that comes through my LinkedIn, but echoing what Alex said, just important to contextualize, or at least to show that you've done a little bit of research in terms of maybe the sectors or the focus of the fund or the individual as well as the stage, and just kind of be open to kind of articulating your business as simple as possible.
I wanted to make sure not to steal the stage. I saw a couple folks putting up the question mark, and all I'll ask is for your questions to be brief, so we can get to a couple of them. And I saw Dale had asked earlier as well. So Dale, I'm going to bring you. You don't have to come on stage. You now have been offered the public microphone.
Hi everyone, Dale Rodriguez from Amicari Services, a really quirky and weird accounting firm. So my question is, in terms of approaching VCs and investors, at what stage do you have to have your figures together? And I ask this because I have a few clients who are looking for investment, and they are natural entrepreneurs where it comes, detail is not their thing. And obviously they come to me, an accountant, to get the figures all sorted. But there's kind of this like, well, at what point do they do stuff? What point do I do stuff? And also, how raw does the vision and idea have to be numbers wise? Can it just literally be sorry, you said quick questions, a quick conversation, or do you have to have certain things in place? What do VCs look for in terms of those numbers?
I don't know. The short answer that I can give you is at day 0, you should have maybe started to get your thoughts around the numbers. Even if, your company is one person and you spend 300 euros on rent, you can start tracking those things from very early on. And the sooner you start doing it, the better you'll be able to track that as you grow forward. Now, obviously, from a VC perspective, they don't invest maybe at day 1, but they will be investing at wherever you start, already showing that it can grow into something bigger. And having those numbers from early on, it only shows you how you progressed along the line, and it helps the investor just, profile you back then when you started day 0 to where you are now, maybe day 300.
If you really love your opportunity, love what you're doing, I think some numbers, not all of them, but some key numbers, you should basically suck them up, like sales cycles. You have a great product, you believe everybody wants to have it, and it's a very important question that you should ask yourself: how difficult is it to sell? How long does it take to sell? You should be very, very, very motivated to figure out that number, and it might change over time, especially in the beginning it's longer and then it accelerates, I guess. But I think the fact that you ask yourself, well, what's the sales cycle? I think it's very important, because you love your product, you love your market, you want to know how do you get it into the market, and then it answers by itself. It should. You should know it. You should really know it.
Those were great answers. So the next person, we got Chinam coming from New York City.
I work with VC fund. We're currently raising our first fund right now, and I guess the biggest question I had to ask was, in the fundraising process, right? How I guess you'd call it salesy, but not really salesy. But how insistent do you have to be? Because sometimes you reach out to some people and they say, okay, for instance, they think this VC fund is going to be on the wrong end of that, risk profile, and you don't agree with that. But like, how insistent do you say you should be in terms of trying to, I guess, convince an investor to invest in your fund that you think will be a good fit?
I think you have to be very, very persistent and insistent. I think Jack Ma, didn't he apply for a job 20 times and he got rejected 20 times, and then he kept going.
So give him the real numbers, Alex. So how many times starting your first fund did you ask and were told no?
Oh, I mean, we asked like 300 investors and we got like 10. So, and well, that's it. And I guess if you get a no, ideally, if you can differentiate, if you get a no and you feel the person hasn't understood what you're really about, then keep pushing, then keep going back. Of course, you could be a nuisance. If you get, and it's the same for founders. So if a founder approaches us and we decline, I appreciate if they come back and tell us, I think you haven't understood it. Because maybe you haven't, and maybe it's a huge opportunity.
I'm so happy to have you all in the room. If I could NFT this right now, I would NFT the shit out of it. And you could all take a piece of this home with you.
You just found the perfect fit for NFT.
Yes, exactly. And you guys all rock. Like this event it's always fun for me. Like chatting with these experienced people is always a blast. But it's way more fun when there's like people here asking great questions, and I'm not just by myself, in my bedroom talking to myself at the wall. So thank you all for giving me the opportunity to not be a crazy person, and instead have a great time with you guys. Speakers, you all rock. Thank you for taking the time out of your day to be here tonight. Is there any? Do you guys want to tell folks how to contact you if they're wanting to network with you? Should we do a quick round of how to get in touch?
Yeah, sure, definitely. I mean, you can follow me on LinkedIn.
Yeah, LinkedIn works for me as well.
Likewise.
Same with me, and my Twitter ID is just do it, Alex. So you can I'm also very active on Twitter.
You can see me right here next Wednesday on the Venture Capital Show. Cheers, everybody.